Let's return now to Australian politics and particularly the economy this week. We saw rates are up. I'm joined by the Assistant Treasurer Daniel Mulino. Assistant Treasurer, thanks very much for your time. To kick off with, I want to just play you a little of what the RBA Governor said and get your thoughts on it. Let's have a look.
I know that you say you don't want to talk about fiscal policy, but isn't it true that fiscal policy and monetary policy should work hand in hand and be complementary? You said in December that you hadn't had any difficult conversations with the government about public spending. In light of the inflation story and what you've had to do today, is it now time to have a difficult conversation with government and have fiscal and monetary policy a little bit closer aligned?
No, I'm not going to tell the government what to do with fiscal policy. That's not my business. As I said earlier, we work with aggregate demand and basically we are seeing aggregate demand, public and private, push up against the limits of growth, and that's what we're seeing in terms of inflation at the moment.
That's the Governor there this week. Saying it there in her own words, it does include, obviously, public demand. That's part of the picture. Why doesn't the government, the Treasurer, just simply be upfront about it? It's not just private demand, that the government spending's having a big say on inflation too.
Well, Kieran, I think if you look at her comments in a broader context, so that was part of a set of observations on the economy. And what she has said, both in her comments at the press conference but also in their statement after the decision, is that it was private demand that came in higher than expected. And they made explicit references to private demand in their statement on the reasons why they lifted rates. So that's really what's driving things here. They didn't make any references to government demand in their statement.
But we're talking
it
about,
is true
you're
that
an economist and very well-credentialed economist. This is the highest level of government spending in 40 years outside of the pandemic. So they mightn't mention it, but economists are mentioning that very point.
And what I would say is that what we've seen is the largest nominal turnaround in the government's fiscal position in Australia's history. Our total spending is $233 billion less than it would have been based on the trajectory that we inherited.
From the pandemic?
And that's based on the period at the election that we came in on. And that's based on the trajectory that we inherited from the opposition. And that's based on us having banked a significant proportion of the unexpected fiscal uplift. It's based on us finding savings. It's us showing a great deal of spending restraint. So,
should the government gone further, though, if you're still at 40-year highs?
Well, look, at the last election, the opposition went to that election promising higher spending and bigger deficits. So I would just say, if the opposition wants to make this the benchmark, they went to the last election promising higher deficits and more spending.
That's true, but rates are going up under you. Rates are going up under this government. Should the government have done more in terms of spending restraint? Can you go further?
Well, look, the budget is a constant work in progress, and what I would say is that there has been very significant progress. I would point to the $233 billion of nominal turnaround. I would point to the fact that there's been over $100 billion in saves, and these aren't easy. These are all programs that are worthwhile programs, but we've made some very tough decisions in our first four budgets.
The thing is, you need to make room for the private sector, don't you? Because the private sector is more productive and the government is squeezing out the private sector right now. That's the reality.
Well, I wouldn't accept that. And again, I'd point to the fact that the Reserve Bank in their statement made a number of references to the fact that it's private demand that rose more than was expected. They, again, in their statement, their broader statement, have made the point that government demand is moderating. So I wouldn't accept the notion that we're crowding out the private sector. I think private demand is the issue that the Reserve Bank is focused on.
I want to ask you about a few other issues. Firstly, some managed funds. This is your area of responsibility. Some investors losing millions and millions of dollars. Can you talk us through what's happening on that front? How serious is the collapse that we're seeing in a couple of those funds?
Yeah, well, thanks for raising this, Kieran. 12,000 people roughly lost over $1.1 billion. This was a really significant event, and it points to the fact that we need to look at the protections in our system, and we've started to do that.
The Shield and First Guardian are the two funds, yeah.
Exactly. And for the people in those two funds, what I would say is that the compensation scheme of last resort, which we enacted in the previous term, is going to provide up to $150,000 for people that obtain a determination in their favour at AFCA, which is the independent dispute resolution body, but where the party against whom that determination is made can't pay. But what I'm now saying to people today, and ASIC is out saying this, is that people need to lodge their claims. We've already had a few thousand claims in, but we need all people to lodge. There are some deadlines coming up in March and April for different financial advisors. So I encourage people to go onto the Money Smart website or the AFCA website. Anybody affected by this, please put your claims in.
And then they'll get some of their money returned, at least some of it back. I want to ask you, before you go, the capital gains tax discount, looks like the government's going to cut that back. Why?
Well, look, I wouldn't accept that premise. What I'd say is that there's been a lot of discussion of housing, and appropriately. I mean, it's a very significant public policy issue. Our focus over the past term and the past 6 months of this second term has been on the supply side. We've invested tens of billions of dollars. We have the Housing Australia Future Fund. It was a very significant issue at the three-day Economic Reform Roundtable, and coming out of that, we saw the National Construction Code frozen, other than for safety and other related issues. So we're doing a whole series of measures on the supply side.
This could damage supply, couldn't it? If you don't have investors out there buying properties, if you reduce the capital gains tax discount.
But really what I'd say is when it comes to housing, our focus is on the supply side, and I think that's the right approach, and that's what I think economists would agree should be the approach. When it comes to our tax settings, there's no changes. There's no changes to our plans on that front.
Not happening?
We have a whole...
There won't be a change on this?
Our planned tax changes haven't changed at this point, and what I would say is that we are focused on delivering income tax cuts for all Australians. We've just seen the delivery of 20% cut in HEX levels for 3 million Australians, and we've delivered payday super changes. So there's a whole series of tax reforms that are either delivered or in the pipeline, and that's where our tax plans sit at the moment.
And on capital gains tax, just finally, if you do reduce it, would you grandfather any move on that front?
Oh, look, as I said, our tax policies haven't changed, and any kind of tax.
No one's ruling it out in the government.
Any kind of tax consideration in the future will go through all the normal processes of cabinet and so forth.
Would it damage supply?
No. So look, I don't want to speculate on all the different possible parameters, but to say that we've got a full tax agenda and we're delivering on that.
Daniel Mulino, thanks for your time. I appreciate it.
Thanks very much, Kieran.